Good afternoon, traders and investors. Will back here with another one, coming to you with a Sunday night video. Hope everybody had a beautiful long weekend. And in today's video, guys, we're going to be going over the top 5 options plays for the upcoming week and also recap last week's top 5 options plays and see how those panned out despite the shortened 4-day trading week that we had last week. And keep in mind, guys, on the channel, we like to sell options. More specifically, we run the put wheel strategy. The put wheel strategy is the main strategy that I use for my trading account that I showcase on the channel on our daily market recaps Monday through Friday. And it's basically a very easy strategy to implement, whether you're a beginner, intermediate, or even advanced trader. Now, it just entails selling puts at designated strike prices, most notably towards support levels, in hopes of gaining all of that juicy premium by the week end. Essentially, these sold put orders act as buy limit orders. We're really trying to sell puts under the market price, and if ever the market doesn't come down into our price, we just collect the entire options premium by the week end. Very easy strategy to run and very stress-free strategy to run as well, guys. That's why it's one of my preferred trading strategies as a whole. So without further ado, guys, let's get right into today's video. So let's start off with a little bit of context, guys. So on Friday, on the day off, the holiday, we did have a big piece of news, and that was the PCE inflation report, which is what the Fed monitors most closely. And as you can see here, guys, the data really came in line. There really wasn't any positive or negative surprises. The data really came in line. Key Fed inflation gauge rose 2.8% annually in February, as expected. On a month-over-month basis and on a year-over-year basis, the numbers were really coming in line. So we're not going to cover this article too much in today's video. We'll do that tomorrow in the daily market recap. But just to show you guys that this news was a relatively positive event after prior inflation reports in January and February came in hotter than expected. This one finally coming in line, and your futures markets reacting very beautifully. You can see, guys, that in your pre-market trading, this is Sunday night, obviously, take a look at NASDAQ futures already up about 0.8% and the S&P already up about 0.5% as well. So all of that in the context of our continued potential daily uptrends in SPY and QQQ, your bulls maintain full control. And in terms of your weekly news, we don't really have much big news events, guys, before the jobs report on Friday. So this should be a fairly smooth week in terms of premium writing that we're able to do on most major stocks that are in this list. We also don't have many earnings catalysts either this week. Take a look, no major earnings that could move the market in a specific way, one way or another. So all in all, guys, should be a fairly regular week of trading. That's why I brought those key things up just now. So before we get into the plays, let's go over a few of the rules, and we're going to go over these quickly, guys. I kind of want to shorten down these videos a little bit more, try to keep them under 30 minutes because I know your guys' time is valuable. So in terms of the put wheel rules, I'll go over these very briefly, not as in-depth as before, but if you haven't seen my 30-minute video on how I do this put wheel strategy extensively, where I go in a lot more into detail around the rules and how I pick my plays, I'll link it top right corner of the video right now and leave that video down below in the description as well. So let's go over a few of the rules here. Number one, we always want to be writing puts on a solid company, preferably a company that you know. It just makes managing the position a lot easier, right? You don't want to start writing puts on companies that you know little to nothing about. It just makes, if you ever get assigned on some short puts, let's say you have to buy 100, 200, 300 shares of a stock, you may as well be doing it on a company you know and a company that you believe in. It just makes managing the position a lot easier, guys. So I'm always writing puts on solid companies. Number two, we want to target companies that are in monthly uptrends or long-term ranges. This once again adds to the probabilities that we don't get assigned by the weekend. If we're in a monthly uptrend or a long-term range and we're targeting the bottom end of a long-term range, something like, let's say, the range that Autodesk was trading in most recently, right, in the past couple of months, you can see the bottom end of the range. Well, we can count on our long-term bulls for support. The same thing is true when a stock is in a long-term uptrend here and you're just looking to set higher lows into higher highs. We're looking to take the higher low trades because we know that there's long-term support provided by the bulls in a expansionary trending phase, right? So that's why we choose to write on companies that are in monthly uptrends or long-term ranges. Number 3, very important, please do not write any puts on any companies that have earnings over the upcoming week. You may see me do it on the channel a few times for my own personal trades, but every time I do, I'm extremely risk averse with it. I give myself a very wide margin of error, but still, that can still lead to you being assigned and take somewhat of heavy losses. The most notable one that I took recently, guys, was on Snowflake when I tried to play the earnings, and I wrote the 180 puts for a stock that was trading prior to the earnings closer to about 230, and it really came down, almost assigned me, and then moved lower. I had to close this trade at a loss. I gave myself a very wide margin of error, but it just was not enough. So that's what can always happen, guys. You can end up with some negative surprises after earnings, and I just don't wish that on anybody. It requires a lot of mental stamina to manage the position thereafter. So if you just want to be safe, just don't play companies that have earnings this week as a whole, and you should be really fine. Most of my losses in the past 6 months have been earnings plays that have gone wrong, and I've cut the positions for a small loss. But still, other than that, guys, when I'm not writing earnings, 90 to 95% of all positions just end up in profit, never getting assigned. So just don't do them. Number 4, we want to be writing these at support areas or areas of breakout retest. I'll break out the Autodesk trade once again to show you why that's important. So support area, we want to be writing towards the lower end of a wide support area right down here. So you can see that. In terms of the breakout retest, guys, well, the breakout retest is just a breakout of a range, retest the top end of the range, use previous resistance as support now, and run this trade location right here is a very high probability trade. So that's why every time I'm writing puts, guys, it's either going to be at a big support area or at least an area of breakout retest, as we just saw. Number 5, we want to be writing on red or flat days. Once again, this increases our probability of not being assigned. So this goes in line with our next point of being writing at or lower than the expected move. In any given week, a stock has an expected move. If you don't know what that means, it means that the market makers are pricing in probabilities of how much a stock can move in a given week. If you don't know what the expected move of a stock is, you can go on this free website called Options AI. They have a free tool, not sponsored by me or anything, where they give you the expected move for a given week. And you can see here to the downside, Shopify that I have here, expected move is about 3.5%, and our downside target is about 74.50. So it's obviously to be argued, if a stock opens, let's say Shopify opens red on a Monday, taking us down into this expected move, well, it just increases our odds. If we can write below the expected move on a red day, any single bounce, guys, is going to take a lot of premium out of that contract and make you profitable quite quickly. That's why we do this in combination. We want to write on red and flat days and be writing lower at or lower than the expected move. Once again, all of these is just to increase our probabilities of not being assigned on the stock. Before last here, we want to be writing 0.5 to 1% in weekly premium. What that means, guys, is if we have let's say we have our options chain in front of us here, we want to be targeting our premium for the puts needs to be about 0.5% to 1% of the strike price. 1%, let's say $77, 1% of 77 should be about $77 here. So you should see 77 cents on the bid. You can see that's all the way down to about the $75 range. 0.5% would just be half of this, right? So it'd be roughly 35 cents. So it's just a very quick and easy way of determining whether or not you're generating enough premium for the risk that you're taking here, guys, right? If you're writing always between 0.5% to 1% per week, you should be gaining annualized premium on that exposure of between, it's basically 0.5% times 52 weeks in a year, which would be roughly, 26%. And if you're writing 1% a week, all the way up to about 52%, right? So we should be making anywhere between mid-20s to about 50% on the higher end per year if we're running this strategy correctly. And last year, I was able to generate over 70% running the put wheel as such. Now, lastly, we want to take profit at 90% of the contract value. That's just because this strategy is so hands-off and so, so risk averse that whenever you're writing whenever you're writing the puts, it's usually going to be on a Monday or a Tuesday. And so let's say on a Wednesday or a Thursday, the stock moves back in your favor and you're not at your computer. You definitely want to be able to take profit on those contracts if you're not there. That's why we set a take profit order at 90% of the contract value. If we take Shopify for an example, let's say we're writing the 75 puts, right? And we get 71 cents for them. You want to set a buy back on this contract at about 7 cents, which would be 90% of total take profit. So those are the rules of the game here, guys. Now, Let's jump right into our last week's top 5 plays, and we're going to start it off with Apple. So Apple's been one that's been featured on the channel now for a few weeks running, just because it continues to be in such a juicy area of the lower 170s, mid 160s at this point. Last week, the expected move was a bit below 170. So I was telling everybody that in terms of writing short puts, we want to be writing below 170 to about 167.50. And as a matter of fact, the trade did open up here both on the Monday and on the Tuesday. Apple was trading below 170. You could have got the 167.50 strike for roughly 0.5%. There was at any given time between 80 cents and $1 on the bid, Monday and Tuesday for the Friday close. That was a very juicy trade here, guys. Did not take that one myself, since I'm already assigned 200 shares on Apple previously. But for anybody who had the opportunity to take this trade, it was a very juicy trade indeed. Now, moving on to trade number 2. So that was a win for anybody that would have taken that. Trade number 2 was a trio of semiconductor plays that I was presenting. First off with AMD. So AMD, we were looking for AMD. The expected move last week was about 172.50. So we wanted 170 or below. And as you can see here on Monday's trading, after some negative news hit AMD and Intel more specifically, that was news that the Chinese government was banning government officials from using AMD and Intel processors in their computers. And that news really sent the stock, tumbling heavily here on the Monday opening session. It actually came down right to our expected move, 172, and that freed up so many contracts, guys, all the way from 165s to the 167s. Everything was fair game for AMD at that point. I actually took this one in my own account a bit late, however. I only got back to my computer after an appointment that I had, and I was able to get, you can't see it here, sorry. So you see the AMD trade, I took the 172.5s after the stock had recovered intraday, and I was even able to get about 75 cents for those. So very happy. Those trades pretty much ended worthless on the week because AMD closed above the 172.5. So very juicy trade on AMD if anybody's watching early on in the Monday morning session. The second trade we were looking at was ON Semiconductor. ON Semiconductor, we like this one, guys, because it was relatively low into our support range down here. And I was saying anything in the $71 to $70 area was very juicy for our bullish support zone to really play out and give us an advantage. And as you can see here on the Monday session, we did drop down into the $72 range, which did, as a matter of fact, open up the $70 contract. You would have been able to get about 40 cents on the bid for that one at the time. So it was very good. ON Semiconductor ending about 73.55. I did not take that one on the day off. On the day of, I took that one day later on the Tuesday, only got 20 cents for this one. But at that point, guys, the price, even on Tuesday, right, had moved significantly away from 71. And with only about 2 days left of trading, there just wasn't enough premium. I still chose to route them all the same. Got about 20 cents here. So quite happy with that trade too, in the form of ON Semiconductor. It'll be featured in this week's video as well. Now moving on to Intel. Intel was our third trade in our semiconductor trio that I was forecasting for last week, right? And we were looking down $41 to $40 was the desired strike price. Why? Because that comes down into our larger support area, this green box, which is a beautiful area here of support. It's previous resistance, and now it should be acting as current support. And that really extends all the way up to $40, $39. But I was even comfortable taking it, guys, at the $41 strike. So very decent trade. It was also brought down here early on the Monday session with that China news that affected both Intel and AMD. And you can see we really dipped down here below 41 even. It opened up some fairly juicy trades. So I was able to take that one as well a bit later than expected, but nonetheless, I did get my 0.5%. You can see here I chose to write one put of Intel at 41 strike, and I got about 23 cents, which was 0.5%. Just 0.5%. If you don't know how I'm doing that in my head, guys, 0.5% is half of the strike price here in cent increments. So half of 41 is about 20.5, and you need to see about 20.5 cents on the bid. So you can see here that we got over that. So it did respect our rules. Very juicy trade on Intel. Very happy with the way that one played out as well. Now, the next trade we were looking at was something from a different industry, and we were looking at Caesars Entertainment. Caesars Entertainment was featured here on the channel a number of times over the past couple of months, guys, and I really love this lower $40 all the way to $38 range. And whenever it comes dipping down in this area, you can see how solid of a support level it's been pretty much for the better part of the last 2 years at this point, right, guys? And even prior to that, you can just see what a big congestion zone this whole area is. So we were looking pretty much last week for anything below $40. or close as possible to $40. The expected move was about 40.11. You can see here on the Monday session, we didn't really do much, kind of hovering within the Friday close. I still went for it myself here, guys. I still went for the Caesars. I went for the 40.5s, a little bit above our expected move, but still was in such a juicy area that I went for it nonetheless. Been very successful on Caesars trading so far over the course of the past 6 months. So I chose to go for it. As you can see here, we wrote the 40.5s, 2 contracts for 20 cents each. So pretty much representing our 0.5% rule. Very happy with the way this one played out, guys. And Caesars is constantly on my watch list. Whenever we come down to this lower area, you will see me playing that one quite frequently. Our before last trade was Datadog. Datadog was one that we were trying to go for the breakout retest trade. So you can see here on the monthly, looking very good, monthly uptrend. And now we're looking to set the monthly higher low. This whole green box is huge support. Looking to set the monthly higher low and then run further in this cybersecurity play. However, Datadog didn't really offer us much of an opening. The expected move last week was about 119.78. So we were looking below that. I was saying, you know, as low as possible, right? 118, 117. I want to get as close as possible, as low as possible in this range, as close as possible to 116, 115. But unfortunately, last week was not very volatile. So even on the Monday session here, we were trading roughly 122. I was looking at premium all day, guys, and there really wasn't much here in the 119, 118. So I didn't trade this one myself. However, it will be on the watch list in this upcoming week as well, because any dip buying opportunity, we have some huge support here, guys, from our long-term bulls that we need to be taking advantage of. So Datadog last week was a no trade event, but still a decent position nonetheless in terms of just eyeing this one for a potential pullback. Now, moving into our last one, we were looking for Shopify. So Shopify as well has been one that I've been playing on the channel now for a few weeks in a row, pretty much up until the last month. Why? Because it's kind of like the Datadog chart. Beautiful monthly uptrend, looking for the monthly higher low. So much support down here. Monthly moving average is right $69. And this great area of resistance, this yellow line right here, which is acting as current support as well. So we were targeting as close as possible, $72, $71. I did not take this one myself. No Shopify in the account. Why? Because it just didn't come down fast enough for us, guys. You can see on the Monday session, everything remaining really flat. So weren't able to get that dip. I'm looking for a dip down here, guys. $75, $74. That should free up the 73s down to pretty much the 71s, which is exactly where I want to take this trade. So Shopify, unfortunately, no trade for last week, but the trade idea was good nonetheless. So that's pretty much everything for our last week's plays here, guys. Now let's take a look at this week's plays, and you'll see that a lot of them are coming back just because they're still respecting our support levels, and they're still at attractive areas where we can be playing them. So once again, first play of the week is going to be Apple. Apple representing some insane value down here, guys, around the 170 level. Right now, we're up trading about 171.48. The expected move for the week is about 168.50, all the way down here. So there's going to be 2 trades that we're going to be looking at for this week on Apple. Now, if you've been on this channel for a while, you know that I really like to play the 170s. The 170s is a bit more aggressive. It's above the expected move. If you want to be conservative, we could be expecting a little bit of a dip on Apple down here into maybe the 170, 169. If you get that, then you probably will have a few more contracts freed up in the 167.5. 167.5 is going to be below the expected move and closer to our last area of support down here. Now, if you're an aggressive bull like me on Apple and you just love the levels, I like playing the 170s personally, so you can see how much premium we're getting for the 170s right now. If Apple opens similar to the price it is tomorrow, right? You can see the 170s are paying about $1.10, which is over our 0.5% rule. We should be seeing about 85 cents here, so they're paying a bit more. The 167.5s, we still need to see about 85 cents on the bid, and they're just not paying that. So if you want to be able to get this contract, we're going to need a little bit of a dip on Apple. But just keep in mind, guys, the positive futures data, the fact that the data on Friday was good, I think the market's going to open green. So if Apple starts opening green, I may go with the 170s myself, try to get as much of this premium as possible because it's just a very juicy level. Now, moving on to our next trade, guys, is going to be Palantir. So Palantir had a big dip on last Thursday's trading after it received 2 analyst downgrades saying that the stock was a bit overvalued. So what we're going to do is try to take advantage, guys, of the a little bit of the a little bit of the FUD that's going around on Palantir stock as of recently, we can see here that the stock is maintaining a gorgeous, gorgeous monthly uptrend right now, just looking to set the monthly higher low for a potential next leg up that should take us up into the $28 range. So Palantir, the expected move we're looking at for the week is about $22.05. So we want to be targeting as low as possible into this green box here, guys, $21.50 down to about $19. So as low as we can get within this big area. Huge prior support, nice previous resistance as well, which will be acting as support. So this area, guys, is super, super solid in my opinion. That being said, let's take a look at the contract values and see how much is currently available around the $21.50, $21 range with Palantir at 22, right? Or with Palantir at 23 rather. So you can see here, guys, that in terms of the 22 strikes, there is a little bit of premium available here. What we need to see, our 0.5% rule, we would need to see about 11 cents. The 22s are paying 17. What I would like to see, I really want to get in the $21 handles, guys. So if Palantir for some reason dips a little bit tomorrow morning down into the 22.75, 22.50 maybe even, like 1-2% to the downside, it may free up the 21.50. So I'll be looking for at least, pretty much 11 cents on the bid. It is 10 cents now, but keep in mind, guys, if Palantir opens tomorrow green, then at that point, I may be just looking to get the 22s if there's still 11 cents on the bid. So between the 22s and the 21.50s. Now, the worst case scenario is Palantir has a big sell-off day, continuation from Thursday, and we open minus 3% already, right? Let's say we open 3% already, brings us right down to 22. Then we maybe even be able to go shopping for the $21 strike, guys. So I want to get as low as possible while still getting 0.5% on my bid for the premium. So hopefully that makes sense. That's what I'm looking for on Palantir this week. Now, the third trade is going to be, once again, some semiconductor plays. So semiconductors, the first one is going to be AMD. So once again, great support area, guys. This was a big range for about a month in January and February. And you can see here, guys, it's the previous all-time high resistance, current level of support, which was acted upon by the bulls in January and February. So this whole area, lower 160s, right? Let's call it 165 and below that, all the way down to about 158. Super juicy support area, in my opinion. The expected move for the week is about 173.73. So we want to be riding below the $173 mark. So let's take a look at AMD and see what type of premium is available below the $173 mark. Give me a quick second. All right, so let's take a look at this together, guys. The reason I do this together is just so you guys can get an idea of how I'm looking for these plays and how I analyze them on the fly. So hopefully you guys can do the same for different tickers when the market is actually open and moving. So AMD, you can see here below 173 would be about 172.50. Now 172.50 is decent. I would like to get 170 and below. So as you can see here on the 172.50s, they're currently paying $1.03 in premium, which is, better than our 0.5% rule. Half of 170 right now would be about 85 cents. So just take that. You can see we're getting well above here, well above 85 cents. Now we're not getting it on 170 and below. Not enough premium there yet. So what we need to see from AMD tomorrow, if you want to get the 170 strike and lower, need to see a little bit of a dip on AMD. Now, depending on the size of the dip here, guys, we need to adjust our targets, right? If AMD obviously opens negative, 3% tomorrow, bringing us down into the 174, 173 range, well, I'm not going to write super close, am I? I'm going to go a bit further down in the strikes while still trying to get, 80, 85 cents as much as possible, as low as possible, while still respecting 0.5% rule. The minimum for me, guys, pretty much that I'm going to be looking for here is the 170s and below. I don't think I'll try for the 172.50s unless AMD opens flat or slightly green. Then I may take the 172.50s because I am fairly bullish on this stock. But best case scenario, we want to be waiting for a dip 170 and below. Now, moving on to the next play on the semiconductors list is going to be ON Semiconductor. So ON Semiconductor, guys, once again, similar to last week, we're going to be looking as close as possible down here to the $71 range. Now, the expected move for the week, I moved it, is about $71.05. Now, that is bringing us really close into our downwards area. This whole big area of congestion, guys, should be acting as great support for our long-term bulls as it has been in the past. Now, keep in mind, expected move, $71.05. And we're still, roughly a few percentage points away from that, right? About 3.5%. So let's see how much premium we're getting on ON Semiconductors towards the $70, $71 strike. Now you can see here, 71s, they are paying 0.5%. We need to see 35 cents or better, and we're actually getting that on the 71s. As a matter of fact, the $70 strike is almost offering 0.5%. If ON Semiconductors opens a little bit red tomorrow here, guys, down into the low 73 handle or maybe even high 72s, it will definitely free up the $70 strike, maybe even the 69. So I'm going to be going for one of these two guys, 70s or 69s for tomorrow, trying to get at least 35 cents on the bid for those. Looking very juicy indeed for a semiconductor play. Now, the third play on the list is going to be Datadog. So Datadog, we were not able to get last week, but I'm still looking out for it because the pattern is exactly the same. Breakout retest trade, and we're looking to get as deep as possible into my green sweet spot, right? So if Datadog tomorrow potentially has a big sell-off, that will free up some premium down here. The expected move for the week is about 119.78, similar to what it was last week. So we really want to start getting below that. So let's go shopping for some Datadog options and see how much they're paying below the 119 mark. Preferably we want to get as close as possible, 116, 117. That's really starting to get the midpoint of this range. Just offers better risk to reward in my opinion. That being said, guys, you can see here, right, without some significant downside, we're not going to get much premium below the 119s. The 119s are pretty much at the limit, right? Almost the 0.5% rule at the 119s. I want to be getting a bit lower. So Datadog really need to see a dip on Monday or the Tuesday, and then we'll be looking, guys, pretty much for a trade down here. We should be looking to make about 60 cents on the bid. I would take 55 if they'll give it to me. 117, 118 are going to be the targets that I'm looking for on Datadog. And obviously, if for any which reason Datadog has a tremendous sell-off in the morning, let's say already down 3-4%, bringing us below the expected move, 119, 118, well, then we want to be going even lower, guys. At that point, maybe even the 115s, 114s may be available to trade. So as low as possible in this range while still getting 0.5%. So that is the Datadog trade. And lastly, we're going to be going over Shopify. So Shopify, same rules as pretty much in the last week. Once again, guys, we're going to be trying to target as low as possible, trying to get as close as possible to $73, $72 range, the bottom end of this support zone, right? This is a very juicy opportunity to buy Shopify, in my opinion. Company had amazing earnings, moving in the right direction, cutting costs, profitability is increasing, everything moving in the right direction as a whole. Now, in terms of the expected move, currently sitting about 74.50. So we will need a little bit of a decline, guys, if we want to go shopping down below there. Let's take a look at the Shopify premiums for the week. And you will see here that Shopify currently around the $73, $72 mark, not quite there yet. The 73s are offering about 32 cents. Close, but not quite, right? We need to see about 36 cents for this to be worth it for us. And the 72s are just not offering anything at all. Really, you have to get the 74s to really be within our ROI rules, right? So at this point, guys, if Shopify sells off tomorrow, if we sell down into the $76, $75 range on the Monday for some reason, I will be looking to shop, guys, the 73s. And the 72 contracts at that point should be freeing up. Once again, we're looking for about 35 cents on the bid for either or of these contracts. So those are the prices I'll be looking for on Shopify. And Shopify is one that it's in such a nice zone, guys. If we open roughly flat tomorrow or slightly green even, maybe we go a bit higher, 77.50, something like that. I may even try, guys, for the 74s. I just like this stock and where it is trading right now. I would really not be opposed to even doing the 74s, even if it's relatively close under the expected move. You can see it is at our most recent support level, and the risk under that is really not that much. I do believe the bulls have us covered down here, $71, $70 at the most to the downside. So looking to be a bit more aggressive on Shopify. So those are pretty much the top 5 plays for the week. Now, there are some bonus plays that I'm always looking out for that I give every week on the channel. Just in terms of bonus plays, guys, right? I have a very large watch list, but the best ones that I found, number one is going to be Alibaba. Now, this is one that doesn't respect one of my major criteria. It's in a long-term monthly downtrend at this point, and it's in an unfavorable sector of the market, meaning China stocks. So if you don't like this position, by all means, don't feel any need to trade it whatsoever. I'm just saying what I'm looking to do in the upcoming week. Baba, if Baba maintains in this lower range here, you can see it's about $72. I want to get $71, $70 as low as possible down here, guys. You can see it's been fairly decent support here ever since the month of December, right? So that's the area that I'll be targeting on Alibaba if the opportunity presents itself. The second one is going to be SoFi. SoFi, I really like this one in the lower $7 range down here. So SoFi, if we come down here, guys, right? Pretty much huge prior resistance in this area. You see it best if I pull up the monthly for the monthly candle closes. You can see here, no monthly candle closes pretty much above $7 for a while. And now no monthly candle closes below it now that it's been acting as support. So this whole green box, $7, $6.50-ish, huge juicy area. So I will be looking for this one. If we get a little bit of a dip, I'm going to be looking for the $7 puts most likely, guys. So that's another one that I'm looking out for constantly. Another one is going to be UPS. UPS had a big sell-off event after they had a little bit of a mishap on their investor day. Nothing much changed with the company. However, it is coming down to a juicy area of support. If for ever which reason UPS comes down low on Monday and Tuesday off of some negative continuation, right? Maybe daily downtrend attempt here, trying to target these lows. I'll be looking, guys, as close as possible to 140 representing a very juicy area of support over the last 3-4 months at this point. So looking very good on UPS. Love the company as well. Nothing wrong with it. Another one I'm always looking out for is Johnson & Johnson. Johnson & Johnson between 160 and 152. Super good area. You can see every time we pull back into here, we usually get a lot of long-term support by the bulls. Just a huge area of accumulation, right? Big previous resistance zone, big current support zone. Love this level. So if Johnson & Johnson is within this range tomorrow, I might be looking at the options contracts, see how much they're offering. And the last couple of plays, guys, Expedia. I'd want to get a bit aggressive on Expedia this week as well. If Expedia has a little bit of a dip tomorrow, I'm going to be looking to play this lower area, 132s. This stock is gorgeous, right? Breakout retest on the monthly. It hasn't been coming down. I've been waiting for it to come down below 130. It just doesn't want to give it to me ever since the earnings the last 7 weeks. So at this point, guys, I'm going to be playing it a bit more aggressively. The fundamentals on this one are beautiful. So if it comes down a little bit tomorrow, I'll probably be looking to shop 133s if I can get them on Expedia. So gorgeous trade there as well. And then we have our two last ones, which are Nike and Starbucks. These are a bit in an unfavorable trade environment right now. They're consumer discretionary stocks with high exposure to China. That being said, both Nike and Starbucks are in big areas of support. So Nike and Starbucks, they don't give that much premium, guys. They're just not very volatile. If I pull up Nike, you can see here Nike currently trading about $94, right? And look how close you have to get even 0.5%. You literally have to write 93s, which is literally not even 0.5%, right? It should be about 46, 47 cents. They're not even paying that as of Friday. So Nike and Starbucks have that feature that their volatility just isn't that high. So the only time we can play them is, let's say on a Monday or a Tuesday, the stock has a big red day, right? 3% to the downside. That will increase the volatility, and you may be able to write 2 strikes below the current price. Other than that, guys, they are in juicy levels, both Nike and Starbucks, that I will be looking to play. But like I said, I'm really only looking to these ones if they have big red days on Mondays or Tuesdays. Then I'll be looking to get as low as possible in the strikes while getting my 0.5% rule. Because in my opinion, guys, Starbucks, anything under $90 is so juicy. And Nike as well. Nike, anything closer under to $90 is extremely juicy in the longer term context of where this stock has been in the past couple of years, right? Just a very juicy area on both of those trades. So that's pretty much everything that I had for you guys in today's video. If you enjoyed the video, consider dropping a like on the video. Would really appreciate it for the growth of the channel. And also consider subscribing if you're new here, guys. We do these top 5 options plays video every single Sunday night. And we do daily market recaps Monday through Friday. So hopefully you guys enjoyed today's video and you enjoy the other videos on the channel too if you watch those. And lastly, if you have any questions whatsoever on the strategy or on any of the options plays that I've chosen, or maybe you have an options play that you'd like me to look at and see if it fills my criteria, well, just leave it down below in the comments, guys. I would love to help you guys out if you're looking to master the put wheel strategy a bit more. And even if they're long options, guys, I do a fair share of long call options as well. So if you have any questions on long call options, maybe you're looking to get some leaps, just leave them down below and I will say what I will do in my own portfolio, obviously not as financial advice, just what I would do if it were my position. So take care, guys. I'll see you tomorrow after the close for our Monday session recap. Peace.